This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
I'm a contrarian investor, buy low, sell higher, or as Ben Graham used to say, as a contrarian, I buy from pessimists and I sell to optimists.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Well, it's not every day that we get a visionary on the show, but the person you're about to hear from, Gianni, really is a true visionary. And you only have to look at Copperbank's website, and we've got a link in the show notes, but Copperbank Resources Corp, and watch his address to the Copper Association of Chile, and that's called CESCO. And you will know that this person is truly a visionary. Like I said, the website, copperbankcorp.com. And Gianni, I've been following the energy business since the first energy crisis in the United States, which went back, I believe, to 1972. And my family was involved in the energy business over 100 years ago and kind of lost touch with it. But we're seeing a transition take place. And I think if we go back to that movie, The Graduate, and Dustin Hoffman was kicking around the pool, rather than telling them plastics being the key to the future, that guy would be telling them copper, wouldn't he?
He would indeed. And that's probably the best advice you can give to if your kids are still in school or if you're running a hedge fund. They should at least understand the basic fundamentals of electrification, because the world is going into hyper adoption of the things that create, transfer, and utilize electrical energy. And the great enabler of that is copper. And this is going to be one of the great themes for the next 20 years. And I think the more you understand it, the more you're going to be able to benefit from this. Really, it's an unstoppable mega trend, because that's what the Green New Deal is. When you go away from emissions and you go into this electrification, and it's going to go from today, if people probably don't realize this, but of final energy usage, only 20% is electrification. And that's going to go in the next 20 years or so. It's going to go to 50%. So you want to be investing in the things that are going to make that possible, because it's really a mega trend.
And we're not just talking about electric vehicles here. We're talking all over the place here, where motors, we use gasoline-powered engines, motors, electrical generation, all these things. It's all heading towards pure electrification.
Exactly. Transformers, windings, cables, and the integration. If you go back to the war of currents, which was Nikola Tesla and Thomas Edison. And Thomas Edison, of course, was pushing direct current. And when George Westinghouse and Nikola Tesla were pushing alternating current, and of course, that is the way that we do distribute electrical energy around the world. And Thomas Edison, the greatest inventor perhaps in history, said the single biggest mistake he ever made was not recognizing earlier that it was alternating current. But guess what? They both come back together. And when I'm talking about batteries are direct current. When you start integrating electrical systems, alternating current, to backup power systems, batteries, that's high amperage, thick cables, and there's no substitute. This is done with copper. It will be done with copper, and you cannot tabulate how much copper is going to be used. Very brilliant people have already done the arithmetic on this, and you have a few scenarios. No adoption, epic fail. The medium of the road, where we're going to get take up across society for these things that are electrification. And then you get the Greta scenario. People are making fun of her because what she wants is, of course, a fantasy and a dream. But if that comes true, well, what's it going to take? The middle of the road is where you and I are going to focus, because we're not going to gamble. We want to go with stats and statistics. The CAGR growth rate for copper is going to be about 6% demand growth for the rest of this decade. What a trend. And the rule of 72 tells us that the overall demand for that metal doubles in about 15 years.
Right. Right. No, I definitely see your point. Once upon a time, telephone wires were all copper. Now we've gone to silicon, fiber optic, but we don't have that option yet. Maybe they're going to come out with nanotechnology with copper tubes, that type of thing, but it's not here yet. So we really have no choice because copper is the best conductor, at least for transmission, that we have available to us now and that we've had available for the past 120 plus years.
Yeah. No, it's true. And I think we've always been talking about, I'm a contrarian investor, buy low, sell higher, or as Ben Graham used to say, as a contrarian, I buy from pessimists and I sell to optimists. People may have said before that this whole copper electrification theme, including Tesla before, it's kind of like next year's investment dollar. You can't say that anymore. It's happening right now in real time. The timing, I'd say, is perfect. A perfect storm has come together. The price of copper, of course, is risen, dramatically, but it's still nowhere near the economic viability to put new copper mines into production. So it's kind of an insurance policy that the price is going to go yet higher. And if you're looking at that, you want to look at, where's the puck going to go, and where's the disproportionate return going to be? And that, of course, in my view, is going to be things that are optionality plays that can be augmented and enhanced. And that's what we've been doing at Copperbank. When in the darkest days of the bear market, we were buying real property, mineral claims, and assets that have historical drilling and resources and economic studies, but focused on copper. And we were buying those things for pennies on the dollar. Well, as you get a normalized market, they're no longer pennies on the dollar. You start to capture, and we can unlock the value there where the intrinsic value it presents itself. And that's where you have, and I can show people 10 and 20x type returns that have happened historically, that have happened recently, and that I believe they're still available for things that have not quite moved. And that's why we're having this discussion about Copperbank, because I think this is a perfect timing, perfect storm has come together for Copperbank. And I can show you the evidence and where we're going to be moving the ball down the field, and how we strongly feel, my team and myself, that we can, people can come for the ride on what we're going to do with the company in the coming weeks and months.
Okay, so going back, you were buying basically deposits at pennies on the dollar that at the current time were not economically feasible, correct?
Correct. So I want to be crystal clear with people. I bought what are high quality, well-located copper projects. So the first question is, if they're so good, why did someone sell them to me? They didn't. They partnered. In every situation, they took equity. They said, look, we like your owner-operator model. We like the fact that your management team is not just raising capital incessantly at these low valuations, but you will treat this and we throw pennies like manhole covers. It's our money. We self-finance it. And so we took properties. First thing, you have to buy in with us. You have to take equity, no cash. The second thing is these projects had to have a significant amount of capital already spent, and that money went to money heaven. The previous operators on our portfolio of projects spent over $120 million drilling, land procurement, engineering, metallurgy, engineering studies. We have all that data, and we like the way these projects look at a normalized copper price. But guess what? When the copper price was depressed, just like 85% of the projects in the world do not work at $2.50 copper. Even if copper goes to $3.50 a pound, the world's largest miner tells us that 75% of the projects are not economic. So we said that's the kind of project that we want to buy. And then our risk tolerance, anything that we looked at, our children had to be able to work on these projects. We were not going to go to the exotic locations where you require AK-47 type of protection. That's not for us. My team is predominantly American and Canadian technical people. They live close to these projects, and we could slowly understand them, show where we can enhance the value, unlock that value, and we are now at that point where that's exactly what we're going to do. And the third and most important criteria with our team, we're 1 degree of separation from anyone who is anyone in the copper mining world. Would someone want to buy these projects from me a more senior company? Do they have any fatal flaws, or are they in anything that's negative that actually, once we answer some unanswered questions, you have that problem sometimes that no one wants to buy it from you because it's in a terrible place, or because it requires AK-47 protection, or because it has too many technical fatal flaws. We have none of that. So we believe our projects check all the boxes, and where we're sitting right now, and I can show you some charts later to really graphically demonstrate that to anyone. We are trading, the current market cap at Copperbank is $28 million. And if you look at based on our share structure, just the work that was already completed on the portfolio would be $1.50 a share. So there's some baseline value. How can the stock go up 500%? Well, if you look at how much money was spent there, eventually we are going to be able to capture some of that upside, I believe. And the market cap high, so if you go back to 2011 when the copper price was high, 9 years ago, what was the market cap of all the stuff I bought? So we know the previous operators are aligned with us. They took equity. They're coming for the ride with us. Their market caps was in excess of $250 million. So we're trading at 28 million. There's a 10x differential. So if we do get higher copper prices in the future, and we already are getting that atmosphere, it's plausible. It's not fantastical to say, can we unlock value to that, actually close the gap between our current market cap and where they traded once upon a time? And then we layer in the hard work that my team's doing. Can we actually see a disproportionate benefit where we surpass the old market cap high of that portfolio? And that's what we're working very hard to achieve. And it's actually already started. We've got boots on the ground starting this weekend in Arizona at the Copper Creek project. And we look to deliver a significant amount of news flow in the coming months. That'll culminate in what should be an updated resource at the Copper Creek project. And we would like to present, as per my press release about 10 days ago, some kind of a conceptual drill program that we could do later in the year to take the project and move the ball down the field.
So right now, as of today, copper is trading right around 362 thereabouts per pound.
Correct.
What happens if we break $4? Where do you think that sends things?
Well, let's paint the picture for people on the historical reference. And I always compare copper to oil. Why? 90% of the time, they are coupled, meaning when the oil price went ballistic in the 2004, 5, 6, 7 period, so did copper. Identical, week for week. They achieved their all-time highs. They crashed in 2008. Then they peaked again in 2011. And then what we've seen happen after the oil price collapse at the end of 2014, copper fell in sympathy with oil. This is all decoupling. And now you can see that very clearly on a chart. And I think that the copper price will, in my view, because of engineering, it should surpass its old all-time high. And that's because the industry has already told us, the world's biggest mining companies have told the investors around the world, we spent a fortune looking for copper and other minerals during the China super cycle. We did not find a lot of high-grade, world-class deposits. And I'm not doing this to be colorful. This is a very telling graphic. When you look at the billions that they spent and then you find the discoveries, it was almost non-existent. So what we've found is that where we're going now is that because of engineering, what they did find was low-grade resources. We cannot make them reserves unless the copper price goes significantly higher. And it's an insurance policy, in my view, that you are going to see in the near future, not 10 years from now, but it's happening kind of in real time, where copper, I believe, it's 35 cents away from cresting $4 a pound. Once you see a 4 on the copper price, you're in all-time high territory. This was euphoria and ebullience in the copper mining world. And if you look at the valuations of copper companies when copper last time was $4, there are 10 and 20x type returns on the table still with certain types of deposits for investors if they're going to follow these trends. But if you follow the drama of 20 years of copper prices, two things to glean out of this long answer I gave you. One, for most of the time, it followed oil prices. This is no longer the case. It's actually rising of its own velocity. And number two, it's went from a low of 60, 70 cents in the early 2000s to the point where we're coming into the $4 range. And if people look at the technical analysis, Elliott Wave was suggesting that they see copper going to $7.50 a pound. Now, everything, any commodity that goes through, never mind its old all-time high, but if you're going to have this kind of price movement, it always ends in a mania phase. Crypto, cannabis, lithium, cobalt, you name it. I believe copper is going to be on the front page above the fold of every publication as they realize it's the Achilles heel of this Green New Deal. If they thought that we relied on Middle East oil in the 70s, wait till they find out that copper comes from very few places. 40% of copper production comes from Peru and Chile. Fascinating. No one talks about this. And we know this because when you go to the biggest energy conferences in the world, and they've been talking for a few years now about this pivot, transition, Green New Deal, electric, call it what you will. But Kerry, do you know that copper doesn't get a line item at these things? Nothing, not mentioned. And for you as an investor, if you want to look at that, there is a fantastic arbitrage in this misunderstanding or this arrogance, because it is the one singular thing that they're going to require. Amongst other electric metals, we can talk about nickel, cobalt, lithium, and other things, but copper, king copper, it is the number one beneficiary of all of these trends that are going to occur starting now.
Okay, so question. So we're getting close to $4 a pound for copper again. I think its peak was around $4.40. Is this an inflation play, a demand play, or a kind of a combination of the two?
Well, certainly all the commodities they're priced in US dollars. So we've seen that, and there is a little bit of that happened during the China super cycle and reflation, inflation, call it what you will. It would make sense, everything, whether it's hogs or logs, if it's priced in US dollars and the US dollar is falling in value, and it has to eventually with all the money that's been created and the devaluation of this. You cannot make 1,000 Picassos and find another 1,000 Picassos and another 1,000 Picassos and think that the original ones are going to be worth the same amount of money. They're not. And so everything is going to be repriced and priced higher. That has not happened yet in copper. There's another reason where you could see copper at $7 or $8 or $10 a pound, because when you exacerbate these overwhelming movements that are already well underway, and it's a scramble. And what's the number one rule in commodity speculation? Running out of a commodity, Kerry, does not matter until it matters. And then it matters a lot, because the people that buy copper, the fabricators, the people that make cable, windings, transformers, motors, business for these people is going to be at all-time highs, never better, because electrification is going from 20% of final energy to 50%. So they will be able to pay more for their copper because their clients and their customers are paying and buying these things, and they're going to be buying them hand over fist. We as a society can easily absorb copper prices going to $4.50 or $5 a pound. Easily. We did it before in the China super cycle, where people were worried and scared that copper prices doubled and tripled, and miners were so scared that people were going to substitute from copper. They did it. We can absorb it, and this is something that you will see, I think, really looked upon in research reports, and as people drill down to explain this. I can actually give you some more data if I actually kind of know how much it's going to cost, but we talk about it later.
Sure. So Copperbank, I think you started in 2014, if memory serves me correct.
Yep, at the end of 14. Yep, in the darkest days of the bear market. It was ugly out there.
You are a patient person as well as a visionary. Usually you don't see the two come together. Obviously, we expected these things to go higher, but there's a lot of reasons it didn't. Not really any point in going over the territory. But so it's been 7 years now, and the 7-year cycle. Maybe this really is it. I mean, I've watched copper take off in last year and continue this year. It's really quite remarkable to see. So Copperbank, why don't you show us some slides and explain to us your whole methodology behind putting it together? Because it literally is a copper bank, right?
Thank you, Kerry. And we wanted to show only a few graphics, and these are very important for people. Some people like to have a descriptive analysis. Other people want a pictorial one. This gets right to the brass tacks. We are a portfolio of established, well-situated copper projects in the United States. We have no debt. We own these things on a 100% basis. So there are a few ways that we're looking to drive value or unlock shareholder value now that the copper price is normalized. We have Copper Creek in Arizona, Contact Copper in Nevada, and we have an internal organic royalty company. And I cannot underline enough how important this is for our team and for our shareholders. If and when we're able to do commerce on our projects, Kerry, we're going to hold back the royalty. We have two opportunities. We can spin that out. We can merge with someone else. And the more that we advance our projects, the more value is on those royalties. So if you look at some of the recent success stories like Metalla or Nova, what are they paying for a 1% royalty? It's a real number. We can put a 2% royalty on both projects, and it's a significant value for the company.
Well, it's interesting when look at it, because obviously, and of course, we got our forward-looking statement disclaimer and all that disclosure.
Yeah, exactly. This is important. It should be taken in the context of everything that we talk about. And there's my graphic of Ben Graham, and that's exactly what we are. It's real estate. We own over 10,000 acres of real property. So to be clear, we have mining claims, but the core of each project is real property, private property, which is easier for development, easier for drilling, and a myriad of other things. But it's backed by real estate, the core of the actual company. And I always want to show people, just what did we pay for these projects? Now, remember the ebullience you had in 2007 and 2011. There were all-time highs in copper twice, and money was being thrown at juniors. We bought Copper Creek. We bought low. You can see here, 3 cents on the dollar. So you can see that we're closer to the bottom than we are the top. And with Contact Copper, they had a big run in the first copper price, all-time high. And that we paid about 5 cents on the dollar for that one as well. And it's not that they sold, they capitulated, they partnered with us. So at the time, these guys were the largest shareholders until we continued to buy more and more shares out of the market. And now Frank Holmes and myself are the two largest shareholders of the company. And this is the share price of Copperbank. So you can see that I'm not presenting you and your viewers something that's already went parabolic and they have a hard time wanting to buy it. The trend has moved higher, but you can see that 3 years ago, we were already trading at 60 cents. I was able to raise money at 60 cents and readily available at the time. And then we fell in sympathy with everyone else, but we have a $28 million market cap. And if you look at the differential between the old market cap highs of those projects that we acquired, that's around $3.50 a share. And we are not a dilutive business model. To maintain our properties is about 1% dilution per year. This year's a little more because we're doing some field studies, but one can see the leverage, and it's truly demonstrated that I still believe we are closer to the bottom than we are the top. So people can get a lot of information on us. I've done every show. I've done more than once. I have a book, the best-selling book. It's got 26,000 copies on the street. It really talks about all these themes. It's still very relevant, and it's on Amazon. It's an ebook. It's also on audible.com, and I think people would really enjoy it. It's a 4 or 5 hour view at the world the way I see it, and where copper in the 2020s is going to play a starring role, and you can people can enjoy that as they wish.
If you could just go back to the slide before that, just want to point out that's a very bullish chart formation there, because you broke 32 cents, which looks like it was more or less resistance, and now it's higher. I see that as a really bullish chart pattern.
Yeah, that's the Canadian price. In the United States, the symbol CPPKF, it's about 29 cents. And we do have the financing that I announced a week ago. If people are accredited and they're interested, it's a little bit cheaper than the market. And if you're looking for some kind of position, you can contact me. My email will be provided, I think, somewhere on the screen here. And but that'll be open for another 7-8 days, so people can take a look at that. This is the price, the copper oil correlation I was talking about, and you can see this very clearly. The highs are at the same time, the lows are at the same time. The market cap high of the stuff I bought was obviously at those two peaks, and then this is where we acquired. When with capitulation mode, we did not want to continue to give life support to juniors. We said, look, we'll take over management. We will be dilution mindful, and we will operate these projects, and we will wait patiently until the copper price normalizes. Meanwhile, the team was working at things. We were tabulating, we were analyzing how can we enhance value. The reason we have boots on the ground starting this week is because now we're ready to execute on that. We're ready to deliver a lot of news, and that will culminate in what should be, I think, very exciting proposed drill hole programs coming up. And we can drill all year on these projects, Kerry. We're not limited to any kind of seasonality. And if you look at where we are, oil being the black line, of course, and copper being the red, we should see, and I understand where the future of copper mining is, and I understand the industry spent billions, and I understand that it's low grades. The only way to make these projects economical is going to be a little bit of innovation, a little bit of advancement, but you're going to have to see a higher copper price. It's just not economical. And if you look at the 38 copper projects that have been approved, permitted, and are being financed to be delivered to the market between now and 2027, they are all in Peru or Chile or countries that require AK-47 style of protection, and maybe a couple in mature markets like the United States and Canada. That's it.
Oh, sure.
You have to pay for that, Kerry. The CapEx for a big copper project is $3, $4, $5 billion for a reason. So we feel very strongly with our network and our understanding of the industry that our project located in Arizona is one of the best situated copper projects anywhere in the world. It's the famed copper corridor where it was the world's largest production area until Chile surpassed it. And there are two major geological trends of all the famous mines in Arizona, and they intersect, the northwest one and the northeast one. They intersect exactly at Copper Creek. So it's a very, very big elephant country, complex geological system, which has the highest concentration of these hydrothermal breccias anywhere in North America. And we have only drill tested 40 of the 400. So this is pornography for a geologist. And this is elephant country. Big companies want projects like this, and we are going to be moving the ball down the field. And I think you're going to see a lot of news flow on Copper Creek, and I hope people want to come for the ride to follow that news.
And one thing I just want to mention, Gianni, is you're not just talking your book here, because you've invested money all along, everywhere, every price level that you see on those charts. You've been putting money into the company, you and the insiders, right?
That's true, Kerry. And people talk a big game, but you only get the results of that hard work and that demonstration and that commitment after many years. I have 7 pages of insider buying. I have been the lead order in every single financing that we've done, and that's only to pay our property payments, taxes, auditors. It's typically 2-3% dilution per year. And here's the most important thing. We have done all of our financings above the market, and we did not issue warrants. So every single time that we did a financing, our current shareholders or prospective shareholders could have bought on the market themselves on the same terms. There was none of this, the insiders get a full 5-year warrant type of thing. We are going to succeed with our shareholders. We don't care about salaries. We don't raise money incessantly to pay these things. My team is in it for the equity, and yes, they do have stock options as well. But myself, I look to make the big gain, the big win is going to come with the equity, not in these all these other things that many companies do. And that you cannot do this over 1 or 2 months. When you have the commitment over 4 or 5 years, people can really look, and they can do an audit on all of our historical financings, and they can see all of my insider buying. And it's not check swaps and nothing. This is hard dollars, my real money, including my partner, Giulio Bonifacio. When he came into the company in 2018, he wrote a check of in excess of $500,000. And as the chairman of the company, he does not draw a salary. He has not expensed as much as a sandwich since he's joined this company. He's in it for the equity. And so he bought in, and we firmly believe that, and when we say what we do, and we do what we say.
And that's very noteworthy in this industry. So members of the club weren't lined up outside your door waiting to get their easy cut of the sweetheart
financings, as they say. Yeah, where your normal retail investor does not have that opportunity. And they're always looking at it. And if you look at our share price, it's been in a very measured way, and it's not some parabolic thing yet. I do believe if we deliver hard work, we get positive trade winds in the copper price. And if we get a little bit of success in the drill bit, and you put all this stuff together, that's where you become it's a 3-year overnight success story, just like anything else. A lot of hard work has went there, and when you get this gapping in value. And we are working very hard to unlock that value where we can capture or close the gap between that old all-time highs of the things that we own and where our current market cap is today. And that is, historically speaking, it's something that we believe is attainable if all those things come together, and they certainly have come together. And we're just going to follow the copper price, and the team is going to work very hard at delivering results to the market.
All right. And that's all we can ask for. So you want to go over, take a look at the company's website, which is Copperbank Corp, CORP.com. The ticker is on the CSE, CBK, on the Frankfurt 9, the number 9, Charlie Mike, CM, and on the OTC, CPPKF. And look, send us your emails. Johnny's available to answer all of them. Just send them to kl@kerrylutz.com. Johnny, I should have disclosed earlier, in full disclosure, I own shares in the company, bought them on the open market, as did you. Not quite as many as you, but I'm very bullish on copper. And this just seems like an ideal low-risk way to really play the inevitable increase in copper. I know it's coming. You know it's coming. The rest of the world is kind of opening up their eyes and kind of seeing a hazy picture out there. But based on what we talked about earlier about the conversion, the transition in society, we've had a number of transitions, energy transitions. They're always very tumultuous times. The people who foresaw them coming cleaned up. The people in the legacy industries who kind of had their heads in the sand got creamed, and this one is going to be no different. So I urge you again, copperbankcorp.com. Sign up for the notifications. Johnny, thanks so much for coming on, explaining the case to me. I'm even more bullish now than I was before we talked.
Thank you. Thank you, Kerry.
The Financial Survival Network.